Hi everyone, welcome to IBKR podcast. My name is Elizaveta Gridneva. Another eventful week in Japan, and we are back with Nicholas Ng, who is head of Asia Pacific Wealth Businesses at Daiwa Asset Management. Hi, Nick.
Hi, Eliza. Thank you for having me back.
Great having you. I think let's get straight into it. So recently, Japan's Prime Minister Sanae Takaichi officially announced that she will dissolve the lower house and call a snap election on the 8th of February. Why is the Liberal Democratic Party taking this approach with Prime Minister Takaichi only 3 or 4 months into office?
Thank you very much for the question, Eliza, and it's incredibly timely. One of the main reasons why the Liberal Democratic Party, or LDP for short, is calling a snap election is in the previous elections, the LDP did partner with a party called Komeito. And since then, the LDP has partnered with another party known as the Japan Innovation Party. So it does seem as if the LDP is looking to gauge the, public interest or other potential votes from the public to see if they are able to increase their majority. Currently, the LDP has a slim majority in the lower house, which is at 233 seats from a 465-seat chamber. And I mean, in regards to the potential risk going forward, the reason why there could be, some political analysts do think there is a bit of risk is because it does open up the door for other parties to potentially snatch some seats away. For example, the LDP's former partner, Komeito, has now partnered with another party known as the Constitutional Democratic Party of Japan, and they formed a new alliance known as the Centrist Reform Alliance. And, obviously they hope to take some seats away. However, given that the LDP has officially announced that they've called a snap election, in order to minimize or limit the risk, they've only left a few weeks up until the 8th of February for this to ensure that, their other parties aren't able to build a sizable or strong campaign against them.
Great insight, thank you. And in January, in regards to timing, why has the Takaichi cabinet considered to call a snap election now?
There are two main reasons why a snap election is usually called. The first reason is to seek public approval for a major initiative and, for example, fiscal expansion. And the second reason is to take advantage of high approval rating to potentially gain more seats. In this case, it looks like the LDP is trying to capitalize or take advantage of both. Takaichi's own personal approval rating is fairly high, depending on the source or the poll. It ranges from around 60 to 80%. And, obviously they're looking to use these two reasons to gain more seats.
Understood. And what does a snap election signal to the market and investors?
Since the rumors and then the confirmation came out a few weeks ago, it has been positive for investors. So you would have seen that the stock market has been creeping higher. What it essentially means is the LDP, if they are able to achieve a favorable outcome in the upcoming snap election, it means that they will have more power and more decision-making freedom when it comes to fiscal expansion and the upcoming budget. Essentially, what this is going to do is it's going to boost the Takaichi trades, which is essentially long stock, short bonds, and short FX, or Japanese yen.
Gotcha. And lastly, this brings us essentially to the market. How this all may affect asset classes such as bonds, Japanese yen, and stocks.
I'll start with bonds or yields first and then move to FX and then finish with equities. In terms of the bond market or yields, we would have seen 10-year Japanese government bond or JGB yields trading as high as 2.3% earlier this week, and also 30-year JGB trading at as high as 3.7%, which is the highest in a decade. If in the event that the LDP is able to spend more, this means that there will be more bonds that need to be issued. And I guess as there is an increased bond supply, it means yields will continue to trend higher. In addition, the LDP has signaled that there may be potential consumer tax cuts. And for example, there are some products now which the sales tax percentage is around 8 to 10%. And the LDP may drop this down to 0% for the next 2 years, which may potentially worsen Japan's fiscal position. What this also leads to is if there is tax cuts, obviously consumers will be able to spend more. But if they are able to spend more, it means that inflation may stay above 2% and higher than the Bank of Japan or BOJ expect. And it may force the Bank of Japan to hike earlier than they would like. The next area I'll touch on is FX. Although there was a small bounce in the FX or Japanese yen or FX market recently, it does indicate that the Japanese yen or US dollar to Japanese yen may stay at a relatively weak level. Many investors that we've been speaking to have been curious and wondering, as interest rate differentials between the US and Japan narrow, isn't this positive for the Japanese yen? And investors expect the Japanese yen to strengthen. To take a step back, the US interest rate and Japan interest rate differential is widely looked at by investors. As US interest rates trend lower, this means that money is expected to flow out of US fixed income instruments and rotate into, for example, Japanese fixed income instruments. And obviously, you need to use Japanese yen to buy Japanese government bonds or fixed income instruments. I guess the reason why this isn't happening is in the past, the correlation between US and Japan interest rate differentials have been quite close, but going forward, the interest rate differential has started to break down in the last couple of years. There is a macroeconomic theory known as the impossible trilemma or impossible trinity. And this theory states that a country is able to achieve only 2 of 3 goals and not all three goals together. These goals would be, number 1, free flow of capital, number 2, independent monetary policy, and number 3, a stable exchange rate. In Japan's case, they've chosen number 1 and 2. They've chosen a free flow of capital, and they've also chosen an independent monetary policy at the expense or sacrifice of a stable exchange rate. What this means is the Bank of Japan or the Central Bank of Japan is able to artificially hold interest rates lower than the market expects. And in this case, the longer they hold the interest rate lower, the weaker the Japanese yen will become. And lastly, for equity, in the event that the LDP is able to achieve a favorable result in the upcoming election, obviously this is going to be positive for the equity market as there'll be more fiscal stimulus. And looking back at history, in the last 7 or 9 elections, within the first 3 to 6 months, the TOPIX index has moved up with some sort of positive gain. And just lastly, in terms of the sectors that may do well, are the sectors which are supported by fiscal expansion. So for example, the defense, as the Takeichi cabinet is looking to spend a lot more on defense. So defense sectors will do well. Also with a potential sales cut for consumer products, consumption sectors will generally do well. And also financials and banks as interest rates tend to rise.
That's great. Thank you, Nick, for sharing the outlook with us. It was truly interesting, and we will see you soon again. Thank you.
Thank you very much.
The analysis in this material is provided for information only and is not and should not be construed as an offer to sell or the solicitation of an offer to buy any security. To the extent that this material discusses general market activity, industry, or sector trends, or other broad-based economic or political conditions, it should not be construed as research or investment advice. To the extent that it includes references to specific securities, commodities, currencies, or other instruments, those references do not constitute a recommendation by IBKR to buy, sell or hold such investments. This material does not and is not intended to take into account the particular financial conditions, investment objectives or requirements of individual customers. Before acting on this material, you should consider whether it is suitable for your particular circumstances, and, as necessary, seek professional advice. There is a substantial risk of loss in foreign exchange trading. The settlement date of foreign exchange trades can vary due to time zone differences and bank holidays. The interest rate on borrowed funds must be considered when computing the cost of trades across multiple markets,